Hey everyone, checking in on the markets. I'll put out a separate commodities video to cover oil, natural gas, and gold and miners, and the dollar at some point either tomorrow or Monday on the holiday. So looking at SPY, the bulls saw the gap up open and a strong close up at the high. We're seeing continuation. We have a new daily higher low of 272.87, and the bulls continue to keep full control. At this point, if you are looking bearish and looking for a pullback, you need to remain very patient. We're just stair-stepping higher with every little higher low, and we're heading to our next resistance level up at 278.85 and then 280.40. We have had no resistance between 271.22 and 278.85, and you can see how easily the bulls were able to see continuation in this area. So the weekly time frame, as we know, has been 2 months in a row of straight up bounce with no consolidation, no pullback, and we're watching for that to initially give us. We're looking for a loss of the daily higher lows to give us the sign that weekly consolidation is coming, but obviously we don't have any sign of that at this point. So I've been going over my hedge scenario and my hedge strategy for my parents' portfolio a couple times recently, and at this point I'm not making any entries into SPXS because we're not overextended. Back here I made an entry right here on February 6th because we were overextended with 6 solid days in a row with no consolidation. We then pulled back, and then I was able to put my stop loss for a small loss on that position once we started to see that continuation. So at this point, I'm personally waiting for just under 280 for my initial entry, and if we break the daily higher low pattern, I'll also make an entry, but going to be watching this key level of 272.87. So in the short term, unless we see a big green day on Monday, or I should say Tuesday with the holiday, then I'm not looking to make any bearish entry at this point. And keeping in mind that when I do make an entry, it is just going to be a hedge, which is completely different than if you are not hedging against a long-term portfolio, because in that instance, if we do keep seeing continuation, the portfolio keeps gaining in value, whereas the hedge loses in value. So it's not just a straight up bearish entry, it's a protection strategy. IWM on the daily chart led the way on Friday with huge bull volume and a significantly green day. We've now seen some strength 6 days in a row. New higher low here with the little daily bull flag. 152.40 is that support level. And the next resistance we're looking at, we're starting to break the weekly resistance levels. And now we're looking up at 157.90 as we have broken this resistance of 154.48. That's essentially as if SPY were already breaking the 280 level. So IWM is one step ahead in terms of the size of this bounce. And from the low to the high that we've seen now with no weekly consolidation, a 25% bounce, pretty astounding. And again, at this point, if you are not bullish and you're not comfortable going long with this weekly scenario, that's completely fine, but you don't have to be bearish if you're not bullish. It's perfectly fine to be cash and remain patient for a setup that you're more comfortable with. QQQ daily higher low 169.83. It's been a couple days now in a row where we've clearly seen that QQQ is a bit weaker than IWM. IWM is a bit more of a balanced portfolio for what makes up the stocks and the sectors that trade within it, where QQQ is a lot more tech heavy. And looking at the weekly time frame for QQQ, for the weekly resistance break here, it's 173.31. Have not broken that level yet on the weekly time frame, just like SPY has not broken its weekly resistance up at 280.40. XLF, new daily higher low, 25.73. And as far as resistance goes, we were double topping with the high of Wednesday and the high of Friday. Bulls want to break 26.43 first thing to see continuation. 25.73 is our new key support level. And as far as the weekly resistance, it's all the way up at 27.47. So we're not close to that level yet. We did close over weekly exponential resistance after a couple weeks of sideways trading. So bulls ready for another leg up, but only name out of these 4 so far that have broken weekly resistance is IWM. VIX is losing $15 support. So we never changed the daily trend. We bounced and just set lower highs. Most recently, the lower high is 17.27. We had the bear break of 14.95 at the end of the day on Friday. And the next support level is a long way down at 11.72. Bears still in complete control of the VIX here. Looking at the weekly time frame, we're taking out weekly support levels, and we're in an area with a lack of support. So things may get extreme in the short term to the downside for VIX, and we'll watch to see just how extreme they get. The daily RSI in the upper 30s. The 4-hour RSI ending the week is also in the upper 30s, so we would need to move down into the mid-$14 range in order for those to begin to get towards oversold levels. So my game plan is continuing to day trade. I've been trading the MJ sector mostly for the past couple of weeks, and that's been going well. So I've been trading that sector bullish and watching how the S&P 500 continues to hold its strength, getting ready to be looking for that weekly consolidation, as we certainly have been for weeks at this point, but not any signals to act upon, in my opinion, and patiently waiting for those signals rather than trying to fight against momentum. I appreciate you watching. Hope you have a good, long, happy holiday weekend, and we'll see you on Monday.